for joining in. What I want to start with on this home buyer seminar is the corona cases, as this is vital information to understand. That's one of the reasons why we are in the situation in which we are today. So the first stats I want to share with you is the New York coronavirus tests and positives. As you can see, we way lower. It's about a little bit less than 4,000, comparing it to 11,500 when it peaked out. So we kind of peaked out, and we on the way back down. Now, the crucial lead indicator, which is the New York coronavirus hospitalizations, and as you can see, we all the way down to 831 as of yesterday. Now you can see when we were at a peak, it was over 3,000. So really comparing to about 831, we way lower. Okay, so that's a really good news, guys. It's really good news. And the third indicator is the deaths. Okay, and as you can see, the deaths, they, as of yesterday, again, 299 people, unfortunately, they passed away. Okay, and I mean, this is still a very high number, of course. But if we compare it to when was the peak, which was almost 800, it's almost third. So we on the way out. Okay, I know May 15. That's really the lockdown date so far. It looks like we might be on track with that. It's May 2nd. Most likely end of May we should be all the way down, so we can really go back to work, and we can start living a little bit normal lives than just being locked in the house. Okay, so buying a home safely during the corona crisis, right? Is it possible still to buy? Yes, it is, guys. People still looking to purchase a home these days, and people are still buying as we speak. This is me, John Tayeb. I've been in real estate sales since 2004. I'm a seasoned real estate investor. Been doing it for a long time, and I'm also a business coach for Tom Ferry. He's the #1 real estate coach in the world. Our co-sponsor, Mr. Peter Carlin from Coast Country, to answer any questions you guys have regarding the mortgages. Of course, financing in any crisis, whether it is, Great Depression, Great Recession, or, Corona crisis, the financing gets affected as well. And as you know, most people buying homes with mortgages, so it is important to know where the mortgages are and what's going on. And Peter's here to answer the questions for you guys. So topics we're going to cover, guys: housing market and the economy, right? They both kind of relate to each other. A look at the current housing and economic market conditions. Some of the benefits to buying your dream home right now. That's right, there are still some benefits, which we're going to discuss. Some of the advantages actually buying a home during Corona crisis. Mortgage rates, the cost of waiting, okay? At a glance, 12 steps to buy a home. Virtual buying, as you know, in New York, we still cannot do in-person showings, so everything is done virtually. So we're going to talk about that a little bit. And of course, some of the reasons to use a real estate agents, and we'll leave Q&As at the end as well. So again, if you guys have any questions, feel free to send it in the chat. And I know Josh is there, and Josh is monitoring it. And also, I think we're going to be live on our Facebook, so on my timeline. So if you guys want, you can ask questions over there, and we can go back and we can get that answer for you guys. Housing market and the conditions and the economy. Now, the housing market, right? The coronavirus outbreak, with its quarantine measures and economic uncertainties, has many homebuyers wondering, should I buy a home now or wait? Or is the market ever going to come back, right? Is the market going to recover? Many are asking if the housing market is in trouble. For those who remember 2008, yes, I was in the business in 2008. It's logical to ask that question. Are we repeating 2008, or is it going to be worse than in 2008 in mine? So let's go into it. Now let's talk about unemployment, guys. As you know, a lot of people unemployed. It's sad, over 30 million people, they filed for unemployment for the past month. And Goldman Sachs, they're estimating that 15% unemployment this year. So of course, a lot of the people out of the 30 million, once we're gonna open up the economy, they're gonna go back to jobs. So the good news is these people, they're gonna go get back their jobs, guys. So the numbers, they're gonna drop down a little bit. Next year, numbers should go down to about 6.8, and then 4% in 2023. So this is something what they call the V recovery, because it looks like a V, right? They talk about it on the TV, but nobody really knows what is the V recovery stand for. And this is what it stands for, guys. We go sharp down and we go sharp back up, okay? Because the economy is going to recover. And as you know, the housing has a big impact on the economy. It is a big player. About 25% of the GDP comes from the housing. So really, we are on the front line. Now it shows you, it compares to 2008, and it also compares to the Great Depression, right? The Great Depression, when people were literally jumping out of the Wall Street windows because the market crashed, right? And they lost everything. And as you can see, it went down, and it took them about 12 years to recover. Now, there was a problem because of the stock market. The stock market burst, right? There were a lot of speculative stocks, basically no value in it. Great Recession, as you can see, it wasn't as sharp as Great Depression, but it also took 9 years. And as we know, that was caused by the faulty, standards of mortgages, right? We were giving bad loans. We were giving loans to pretty much everybody. Everybody who was breeding, give him the money, right? No credit, no down payment, no money in the banks. And they were not only getting 100% of financing, they were getting 120% of financing. So very unstable, okay? Now, as you know, today it's a different case, guys. Now, the second slide talks about also the V recovery, as you can see. Now, Goldman Sachs, JP Morgan, and Morgan Stanley, and Wells Fargo, their predictions are end of second quarter, will be rebounding back. So again, looking at the new cases and the hospitalizations, right? It looks like we're gonna go back to work somewhere in May, maybe beginning of June. Then the economy is gonna be slowly but surely climbing right back up. Okay, economy has to go back to work. We have to go back to work. We have to make sure that we can support ourselves and we can support the economy as well. Now, this is Goldman Sachs. It talks about the unemployment, like I was saying, 15% in 2020, 6 to 8 in 2021, 5 in 2022, 4% in 2023. Now, just to give you something you can reflect on, the unemployment was about 3 to 4% before everything happened. So, 15%, that's a big jump, okay? 30 million people filing for unemployment, that's a big number, no doubt about that. However, big chunk of the 30 million is gonna get the jobs back. Once we open, they're gonna go back to work. That's why in 2021, the numbers, they're gonna drop down to 6 to 8%. Okay, so again, we are on the way out. Now, this slide is very important to look at because it compares the unemployment in currently where we are, right? 15, 6 to 8, 5, and 4. And also talks about the Great Recession, the 2008. It talks about the 6 years what followed. And as you can see, the numbers were 7, 10, 9, 8.5, 8, and almost 7. So they were 6 years high. Comparing to now, it's really only 2 years high, right? Not 6 years. And Great Depression, as you can see, the numbers, they're even higher because there were 9, 16, 23, 25, 21, and 20. So the numbers, they were like double than in Great Recession. That's why it took them a lot longer too. It took them 12 years to recover, right? But as you can see, the numbers today, what's going on right now and what happened in 08 and what happened in the 30s, it is a very different story when it comes to the unemployment, okay? So let's talk about the housing. We gotta talk about a few things, guys. Number one is appreciation, right? I think a question on buyers or sellers' mind is where the price is gonna go. Are the prices gonna go up or are the prices gonna go down? are we in a bubble, right? The famous statement in '08, the bubble burst. Well, this talks about the bubble. This is from 2008 to 2005, because keep in mind, 2006 August, that's really when the bubble burst. It took us 2 years to really see the full effects onto the economy, okay? So we have to look at 6 years before 2006. And as you can see, the appreciation per year of the homes were about 10% on the average. Now, comparing it to the past 6 years, they were up 5%. So they were half. So the homes, they didn't appreciate as much as they did, okay? So this tells us that, you know what, the homes, they're not as high. And what it means, they're affordable, right? Because like I said, two things drive the prices of the homes up or down: supply and demand. Very important, okay?
John, I'm assuming that's the whole United States. That's an average.
That's right, yes. So this data we're looking at, guys, good point, Pete. Thank you so much. This data we're looking at, this is national. This is not just for New York, okay? Absolutely not. Now, a mortgage credit availability, right? This is a very important slide, guys. As you can see over here in 2004 in June, this is where I started in the business, actually, in April of 2004, okay? What happened, the banks, they really loosen up the requirements. And I mean, really loosen up. They went from about 390 index to about 868 index. That's about 2.5 times it was easier to get a mortgage. I mean, literally anybody could have gotten a mortgage. Anybody. I don't know how about my dog. Maybe my dog could have gotten a mortgage too. I mean, it was that bad. And that was the issue why the market burst, because people, they were getting mortgages which they couldn't afford to pay for the mortgages. So when they couldn't afford to pay for the mortgages, then they defaulted and they've gone to foreclosure, and the banks couldn't just hold all the loans that they had. Okay. So now what happened from 2006 to 2008, the requirements really tightened it up, because the banks and the investors behind the banks, right? Those big boys, they really control the flow of the money. They say, no, hey, listen, you gotta sort your thing out. We don't want to invest right now because of what happened. And a lot of them went underwater, right? Lehman Brothers, some big boys, they've gone under because they just couldn't get through this. Okay, so they really tighten on the requirements, guys. Now everybody had to qualify with their full docs, right? You gotta show the income, you gotta have a good credit, of course. You gotta be legal, you gotta put 20% down, you gotta have a good down payment, the money has to be seasoned, you need to have a good job, right? And also, before, the loan officers, they were not required to be licensed too. So it was a wild west, and Peter is nodding his head because he knows. Before you could have, give $1 million to somebody and get paid on it. Okay, some hefty commissions, and you didn't need to be regulated by the state or the federal, and that was the problem. That was the problem, and they really did a great job, I think, in tightening it up and really making sure that the banks are regulated and the loan officers are regulated and that the programs are regulated. And that's what happened. The index went down all the way to about 110, 120. Now, as you can see, from 2008, the index has gone up. Yes, it did. They did loosen up the requirements a little bit. Don't take me wrong, okay? It is definitely easier to obtain a financing now than it was in 2008, 2009, 2010, etc., okay? But the index now is 181. So you know what it means, guys? It means that people which are buying homes today, they should be buying because they can afford it. They can pay the monthly payments. Not comparing to 2008, it was 868, now it's 181. Okay, so a lot of the loans which we're giving out today, Peter, and you probably can say something to that. Those are good loans.
Yeah, I just wanted to say something. Thank you. And this is really, really wonderful information. I've never, I've been in this business since 2013. you know, the stuff that you've just been going through, really spot on. I'm loving this. Thank you. So, but I will say that as of today, yes, things are, because of the coronavirus, they're getting tighter right now. They're getting tighter right now. You know, we're wanting, you know, I think for instance, Chase Bank wants 20% down on loans. The credit scores are getting more. You have to have better credit right now. We're checking to make sure that people have jobs right up until the day or the day before closing. So it is that number of 181 is gonna come down a bit, no doubt.
Yeah, and I think it's a good thing too, Pete. I think
I,
it's a,
I do too. No, for sure, for sure. Because I'm finding, listen, I just you know, had somebody close recently, and as you know, we were talking before we got on this on the seminar. You know, he wants to go into forbearance. You know, we that really hurts. It hurts a lot of. It hurts the mortgage banks. It hurts the industry. It hurts a lot of stuff. So we want to make sure that people who are getting loans today, they're okay, that they do have a job and they will be able to pay.
yeah, yeah. Okay, that's great. It talks about the inventory, guys. Okay, because the demand is one, right? You know, people, you know, is it affordable for them? They can buy, but are there homes for them to buy? As you know, what happened in 2008, I mean, from 2006 to 2012, you know, to be frank with you, in those 6 years, there were just way too many homes. Okay. And there's something when we talk about it's the months of supply. Okay. How many months of supply there is. Now, if it's 6 to 7 months of supply, we do consider that to be a neutral market. If it's less months of supply, that means there's less homes on the market. Now we are turning into a seller's market, right? Because there is less options for the buyers, so they have to be competitive, right? They have to really, you know, bid higher and multiple offer situations, and many times really go over the asking price. Now, in buyer's market, as you know, in the Great Recession because of the foreclosures. And we had a lot of short sales, right? I would say probably good 75% of all the homes which were up for sale were short sales in, you know, from 2006 to 2012. I mean, it was a very different market. There were way too many homes, right? And there were just little buyers because of the qualifications, right? The banks, they were so strict that there were not too many people to buy those homes. That's why the prices, they had to go down, okay? They did go down. So very different, guys, now, okay? We don't have that many homes today. As you can see today, the inventory is at its lowest. We got about 3.2 months of supply, guys, comparing to almost 12% in 2010, right? So as a matter of fact, you know, there is not too many homes for sale today as we speak. We need more homes.
John, may I ask you a question?
Yes, sir.
Okay, but you have less homes on the market,
Hmm.
but correct me if I'm mistaken, but I think you have less buyers out seeking homes because of the instability of the market, no?
That's right. Yeah, absolutely. But comparison still, you know, comparison is a good question, Pete. You know, comparison to the levels where the supply is at and how many buyers are there, it's still not
Right.
balanced. And you know, and those are some of the opportunities for buyers
Yes,
to
for
go
sure.
out today and try to purchase a home.
Yep.
You know, I want to share a story with you guys. We're just working on an offer for a gentleman. He's a veteran, okay? So he's going for a VA loan. And as you know, a VA loan, those are beautiful products because you could buy a home with putting 0% down, okay? Now, as you know, most homeowners, when the market's hot, right, meaning everything sells, right? Now they can be picky with the buyers,
Right.
okay? So usually they don't like to take those type of loans. Guess what? Now the homeowners, they're willing to listen. They're willing to listen. So this gentleman, not only he's putting 0% down, but on top of it, he's getting the sales concession. He's getting the whole closing cost being rolled on top of the price by the owner, which is, I mean, which is unheard of
Outstanding.
before Corona. Not only that, the homeowner said, now, if the home is not going to appraise with the sales concession, I'm willing to drop the price down to a certain
Wow.
to a certain level. Can you believe that? I was like, wow,
Wow.
wow.
Wow. Wow. Wow.
And
Wow.
and
Wow.
the caveat on that to a certain level. Now, if it's gonna go way lower, right? The homeowner is willing to reimburse the buyer for the fees which we inquired.
Oh my
And
God.
the appraisal and the home is
That is unheard. And for those others on the call, by the way, John, I'm sure you know this, but in the United States, if you put down less than 20%, you get mortgage insurance,
that's
right?
correct. That's correct.
With a VA loan, no MI, no
Yeah,
mortgage. So
yeah.
this guy's he's getting no down payment, 100% financing. He's getting no mortgage insurance. He's getting a seller's concession, and he's getting a seller that's willing to come down or pay the difference if it doesn't appraise. That's unheard of.
Yeah. No, it
By
is.
the way, if that VA gentleman is disabled, I don't know if you know this one. Here's another kicker. If he has disability, he's got no VA funding fee,
Wow.
which is about 2% of the 2% of the I think of the loan amount. Yeah, yeah,
Yeah, I mean, so guys, before Corona, he wouldn't be able to get his deals.
incredible, incredible.
Those are some incredible deals you can get. And not saying that the market's gonna crash or anything, but there's a lot of homeowners which just doesn't know what we're looking at right now. They don't have the facts right? And they really think, you know what, the war is coming to the end, and they want to get out. Okay, so it is a great time to buy now during Corona. Okay, let me go to the next slide,
I
guys.
apologize. Could I just throw one other thing in, and then
Absolutely.
I'll be quiet. Another thing that is happening is that people want to get out of New York. So I think we're also going to I think there's going to be a lot of activity going on. There's going to be a lot of good opportunities for buyers, sellers, I guess as well, but specifically buyers, because with the coronavirus and our numbers in New York, which are, almost 25% of the world's population, right? Our coronavirus numbers, people are now, I think what we're going to see is an exodus if it hasn't already started. I know my sister got out of New York. She moved to Florida. So people are going to look to get out of New York and sell their properties.
That's right. That's right. Good point. Yeah, we do have also some clients they're moving out for those reasons. So right on. Now the fourth factor, guys, is the use of the home equity, right? HELOC, home equity loans. The good news is that people do have a lot of equity in their homes today. And again, it compares the Great Recession to what's going on today. In 2005, 2006, and 2007, people refinanced, so they cashed out, basically took the money out of their homes, almost $1 trillion, guys, $824 billion of dollars. Now, for the past 3 years, the number was 232 billion. So that's like 25%. So people are not over leveraged, right? Again, they have equity in the homes. They're not over leveraging, right? They're not maxing out the credit card, which is important, right? You never want to max out. You really want to make sure that you have some type of equity in that, so you have something to tap into, and that's really important. The next slide, talks about the equity in the homes, right? It talks about that 53.8% of all homes, that 50% of equity in their homes. That's huge. That's huge. That's big. On the average, 177,000 in home equity. This is according to CoreLogic. Okay, and 37% of all homes are owned free and clear, so they don't even have a mortgage on it. Okay, and almost 27% of mortgage homes have at least 50% equity in the house. So God forbid if something happens, you lose a job or something, you get something to tap into. You got your home, you got your equity, you're good. You can compare it to 2008, where people were buying homes for 100% financing or 120% financing, and then the market dipped 20%, 30%. Guess what? You are 50% minus in your equity right off the bat, and that's really hard to get out of. And what happened? People just walk away. They left everything in the houses and they just walk away from it. It was easy for them in many instances. That's why we had that flood of the supply of homes. Okay, big difference now. Affordability. This is important, guys. Now, as you know, the demand is only the demand, whatever it is, if it's affordable for people. Now, the index on the average, the percentage, of the income which you need to spend to buy a home should be about 21%. Of course, this is nationwide, right? This is national. In '06, it was about 25, almost 26%. Today, the percentage is less than 15%, guys. So it is a really, really affordable for people to buy a home today, guys, compared to 2006. So people have equity in the houses. There's less homes available. It is a lot more affordable. Those are all positive factors of a good market. Okay. So this tells us that we shouldn't be heading into 2008. Yes, P, you got a question?
I don't understand this, and
Yeah.
I don't know that our viewers all understand this. Can you explain? I'm not clear what that means.
Absolutely. Absolutely. So person of the medium income needed to purchase the medium price home. So if you take the median income today, right, in the United States,
Let's take a number. Let's say 50,000.
okay, and then you take the median price of the home,
Let's take 150,000.
okay, today you're gonna need to spend about 15% out of the 50 to buy that home.
I see. I see. I see.
Yeah, that's what it means, and that's that's how you calculate affordability. Of course, it's gonna be different in New York, versus Connecticut or California, of course.
I see. I see. Thank you.
The bottom line, right? The COVID-19 crisis is causing different challenges across the country than the ones we faced in 2008, obviously, as we just saw. Back then we had a housing crisis. Today we face a health crisis. Not saying that one is better than the other, okay? They both were very painful, okay? Like I said, I was in the market in 2008, so I know what people had to go through. However, I also know I'm in the market now, and I know what people are going through on a daily basis, and it is not easy either way you slice it. What we know now is that housing is in a much stronger position today than it was in 2008. It is no longer the center of the economic slowdown. Rather, it could be just what's helpful to pull us out of the downturn. Okay. So some of the benefits of buying a home, guys. Appreciating asset, right? Over time, the asset is going to appreciate time over time. I always say an example, when somebody tells me, the home, what happens if the market goes down? What happens if the pricing goes down of the homes? It might go down a little bit for a little bit, but eventually it will go down. It will go up. My dad bought his place in 1991 in East Elmhurst, New York for $110,000. Now in 2006, when the market peaked, the house was $550,000. Then when it dipped, right, we had the Great Recession, it was about $480,000. So it went down. It went down about 15% in that area, okay? Now guess what the house is today? The house is almost $800,000 today. So, and guess what the house was when the house was built? In 1945.
20,000. 10.
5.
Oh gosh.
$5,000. So, I mean, was it a good investment, for him to buy that home, in 1991 for $110,000? Of course. Of course. Because the house is long time paid off, and he's been reaping the benefits, not paying rent, just paying the utilities and the taxes and the insurance and really building wealth. Now, if you wouldn't purchase that home and you will be renting, your rent goes up. Okay? My uncle, at that time in 1993, he's supposed to buy the house next door. My father got him the deal for that. He was about to sign a contract. He changed his mind. What did he say? He got a cold feet. Till today, he lives in the same place. Where his rent before was about $1,000, his rent today is almost $3,000. Okay? And he doesn't have the assets, and he's paying more, he's paying more, he's paying more, and he will be paying more. So yes, it is an appreciating asset, just besides it is your home. And of course, you're going to build an equity over time. I said it, from 110 to 800. That's a lot of equity building. And there's many ways to build equity. If you go for a mortgage, using something which is called the leverage, of course, you're using the bank's money to buy a bigger asset to really leverage yourself. And as you're paying down the mortgage, because a big portion is the interest and the second portion is the principal, your loan goes down. That way, the equity in your home grows. So not only the appreciation grows your equity, but also paying down that mortgage, it grows your equity as well. And of course, you get some tax incentives, big tax incentives, right, Peter? You can deduct the interest rate, which that's a lot of money. If you're W-2 or self-employed, you're making good money. Guess what? You're gonna like this because you're able to write that interest rate off. You're able to write off the taxes. You're able to write off, the insurance, some of the utilities, and in many instances, you can depreciate a house. What it means when you're depreciating the house, if you buy the house for $1 million, you will divide it by 27 and a half, and every year you're going to deduct what the number is, about $3,000 or $30,000, something like that. About $30,000 every year you're going to write off from your income. So you're not going to pay taxes on it. Or if you W-2, you get your money back. So you're going to have a really, really nice April. Okay. And of course, buying a home is cheaper than renting in the long term. Now, many people might say, but John, if I'm renting, my rent is $2,000. If I buy a home, okay, it's 22. I'm paying more. Or 25. I'm paying more. I understand. Now, let's don't talk about the tax incentives. Let's don't talk about you running off the interest. Let's don't talk about depreciating the house. Or let's don't talk about, you paying down the principal in your mortgage, so you're building equity. Let's don't talk about you appreciating the asset, so it grows. You're really building a generation of wealth. Or let's don't talk about that. Let's talk about this thing. Your payment is fixed for 30 years. Guess what? The rent is not. And for that reason, long-term, owning a home versus renting a home, even though it might be a little bit more expensive at the moment now, it will be cheaper long-term, guarantee that. Okay, so those are some of the benefits of buying a home. And now, is now a good time to buy, guys? That's a big question, right? Now, the interest rates, they're historically the lowest. About 3%, 4%, unheard of. Again, I got to reflect on my dad in 1991 when he bought his first home, and he bought many, many others right after. His interest rate was about 12.5%. And there was a good deal, he was saying. It was like, I got a good rate. Got 12.5 from Chase. It's a good deal. Well, if you tell somebody today, I'll give you 12.5, you're going to laugh at you.
I just gave somebody a 2.75% rate.
Oh my God.
Now, got to say, it was 15 year. It wasn't a 30 year. It was a 15 year. But
Okay.
nevertheless, 2.75 for 15 years. This guy is happy. Then it's a refinance. Can't believe it.
Unbelievable.
But I am down in the low threes. I am giving for 30-year fixed, 3 1/8, 3 1/4. It's the lowest it's been. I don't know if it's ever, but at least for about 30 years.
And so, Peter, also I want to ask you, you see a lot of refinances, for those reasons?
Refinances galore. I mean, I'm having difficulty keeping up with the demand.
It's a good problem to have.
And the demand is here. Everybody, not everybody, but so many people want to do one of two things, right? They want to refinance and take equity out. I have clients who are refinancing, taking equity out, getting ready to buy something, right? That want to buy.
That's
right?
right.
And then I have people that just want to refinance to get that better. I just did a refinance for a guy who bought from me less than 2 years ago. I'm saving him $600 a month on his mortgage.
That's great, man.
It's great. It's a good time for home buyers.
Yeah, it's good for the groceries right there.
What's that? Yeah.
For the groceries right there, that's good.
Groceries, a car payment, 2 car payments, depending on the car.
So again, I mean, like I said, you could find some incredible deals and you could find some really, really motivated people, which they're willing to work with you to buy a home, which otherwise you wouldn't stand a chance. So really, it's a great time to buy. And of course, everybody's situation is very unique. You can always reach out to us, and we can have one-on-one where we can go a little bit more in depth and see what are some of the benefits for you in particular. Okay. Now let's talk about the interest rate, right, P? So, and this is where my dad was. I mean, his rate was higher. His rate was
There
like
you go. Yep.
goes right here. And as you can see, the rates, they were 16%,
There you go.
and they gradually went down. Yeah, when I jumped into the business, the rates, they were in the sevens, 7%, something like that.
Incredible.
So I mean, and they keep going down, and I mean, this is 2018, but like you just said, the rate's now in the 3%. So they even lowered it somewhere around here.
30-year average as of 2 days ago, 3.23.
Wow, that's incredible. Now you save money when you buy while rates are low. Now this shows you a little comparison, guys. In December, which is literally just a few months ago, 4 months ago, 4 or 5 months ago, the interest rate was about 4%, that's still a really good rate, by the way. Okay, today the rate is about 3/4 lower. Okay, now look at the difference. This is based upon $200,000 mortgage. Now in New York the mortgage is going to be probably double, maybe triple. So if you double this or triple this, you could be saving close to $100,000 in 30 years by not waiting and really locking the low rate. Okay, that's pretty incredible. That's a lot of money to be saved, guys. So let's talk about the process, guys. So step one, start your search and research early. Research local market, home prices, etc. Of course, get familiar with the area, see what's going on. What are the homes are selling, styles of homes, what are they going for. Number two, determine how much home you can really afford, right? Get comfortable based upon the monthly payment, and they kind of go hand in hand with step three, where you really want to employ a loan officer. Now, how much is it going to cost to get a pre-approval, P?
You know that answer, and that's a big zero, or should be zero.
Yes. It doesn't cost you anything, okay, but it gives you everything. It gives you the idea of knowing exactly how much can you get. So it's kind of like if you go to a restaurant, right, you want to know how much money you have in your wallet. Because when you look at the menu, you got to know if that's something you can afford, right? Of course, you don't want to go down in and then find out that you don't have enough money in your pocket. It's kind of embarrassing. So the same thing in real estate, right? And most importantly, it's going to let you know how much it's going to cost you every single month.
Yeah.
Keep in mind, guys, unless you buy it cash, what you're really buying is the monthly payment. More than anything else. You're not really buying the home cash, right? You're buying monthly payment. So very important, okay? Now, step 4, find the right real estate agent, of course. You don't have to do this on your own. And again, how much is going to cost you? In many instances, it doesn't really cost you out of pocket, because we as real estate agents, we get paid out of the proceeds, which the attorney, usually the sales attorney, it counts at the closing. So it doesn't cost you anything up front. It doesn't cost you really nothing out of pocket. The seller usually it pays us, okay? And you do need to have a good real estate agent, because this is something we do on a daily basis. So we can really, walk you through the process, show you the ins and outs, right? So you don't have to make some really, really costly mistakes. And like I said, the agents in many instances can really help you out negotiate some incredible deals as well. Now, shop for a home and making an offer. Now, take as much time you need to find the right place. I think if you go back to step 1, which is you start your research early, right? And you get really familiar with the homes and the market and the pricing, the step 5, it's going to be a lot easier for you. Because you're going to know, hey, I'm looking for a 1-family in Bayside, let's say, 3-bedroom colonial with a parking. they go around $700,000 to $800,000, depends on the condition. So, when you're looking at a home and it's priced at a certain value, you know how much the home it should be because, as you know, buyers, they buy by comparison, right? This is something where you're going to go out, you're going to look at multiple places, either online or offline or in person, and then you're going to make a decision of how much you're going to offer and make the offer. Now, if you have a good agent, okay, somebody who's going to really negotiate hard for you, okay, he's able to negotiate and help you get a home at a better price sometimes. And sometimes, of course, in competitive markets, just to get that home you want at that price. That's also very important. Now, the following step is, if your offer gets accepted, okay, if your offer gets accepted, so you're just making an initial offer. We call it the sales binder. Okay, you're proposing a price. Now, the homeowner can either accept, deny, or he can give you a counter offer. Now, if the homeowner gives you a counter offer and you kind of meet somewhere in the middle, let's say, now it's time for you to sign the contracts. Because keep in mind, if you get your offer accepted, it doesn't mean that you are buying that home. You don't have the right to buy the house, and the seller doesn't have to sell you the house either. He's not obligated to sell the house because nothing's binding yet, okay? Once you get the contract signed and you put the money down now and he signs the contracts, now there's an exchange, right? Now you have a full executed contracts. Now it is binding. Now you have the right to buy the house, okay? However, before you do sign the contracts, you got to do a home inspection. Now, what's a home inspection, guys? Home inspection, it's not a tool to try to renegotiate the price and the terms of the home. It is a tool which will help you out to really find out what you are buying, what you're getting yourself into. It's something kind of like you buying a used car, okay? When you're buying a used car, of course, the car is used, right? But maybe you want to take it to the mechanic, right? You want to make sure that maybe there's not something really, really serious. And as you know, there might be some serious things, such as foundation problems, plumbing problems, electrical problems. There might be issues with the roof. There might be mold inside the walls, right? There might be underground water, okay? There's many issues which I've seen, which you cannot really see with your eye at first hand, but a professional in many instances, he will able to discover it and he'll let you know. This is minor, this is major. This is something what you could see, this is something what's behind. Maybe sometimes the sellers try to hide some things as well. So it is very important to do a home inspection. But keep in mind that home inspection is really for your own knowledge, just to know what's going on with the house. Sometimes, if there's something major which you didn't know about, which the homeowner didn't know about, and of course that wasn't related to the offer, you could go back and you can try to negotiate, okay? Once that's settled, you sign the contracts with a full executed contracts. Once you sign it and the seller signs it, now Peter has to get to work, okay? Now everything is in the hands of the loan officer, the processor, the underwriter, and all the stuff in the bank to really process the loan and make sure that you get to the finish line, to the closing. So you need a full executing contracts to apply for the loan. And Peter probably will get you signed some disclosures, right? The loan application. He's going to order the appraisal. Now, what's an appraisal? An appraisal is basically a licensed person, okay, who will go to the house, who will inspect the house. Similarly, like the home inspector, what he will be inspecting is more the home itself, and he will compare it to the other homes, okay? He wants to know, in a home like this, in this area, for how much possibly could be sold for. Why is that important? Because the bank, of course, the bank is in the business of loaning money, right? They want to make sure when they're going to loan you $1 million on that house, that the house is worth $1 million or better. Because if it's not, and God forbid something happens, you lose your job or you change your mind, you just don't want the house anymore, Now the bank has to make sure that they protect the investment, right? So they want to make sure that the home has equity in a homes right off the bat when they give you the money. And of course, the appraisal, by the way, it is a third party. They are not in touch with the loan officer. Only the underwriter can speak to the appraisal. Correct me if I'm wrong, Pete.
Processor. And
Processor.
to be honest, it's really anyone other than the loan officer.
Okay, well, that's making your life easier too, I guess.
Yeah.
And of course, the agent can speak to the appraisal because usually it's the agent, of course, who's sort of like the director on the play, who speaks to lawyers, the loan officer, the buyer, the seller. He keeps in touch with everybody. As a matter of fact, that's the only guy who can speak to everybody on that transaction. The only guy, so much, much needed. And he speaks to the appraisal as well, okay? Step number 10, it's a commitment letter. What's a commitment letter, P?
A commitment letter is basically the first step and one of the most important milestones for a borrower and for realtors, for everybody really in the transaction, but specifically the borrower, because that's basically the bank giving their approval slash commitment to the borrower based on the information that they have, which normally is an appraisal and title, if the title's in already, but the financials of the borrower, the credit of the borrower, and the bank saying, based on what I see at this moment, we feel comfortable to give you the loan. We're not giving it to you yet. We have some conditions to fulfill, and there's a list of conditions to fulfill on the commitment slash approval. But based on what we see, our initial overview, we're going to give you the loan.
Okay. Yeah, and it's sort of like a big stepping stone in the transaction as well, right?
Yeah.
Also,
two big stepping stones, obviously, the commitment approval, same thing, and then what we call the clear to close, which is now we're going to give you the money, schedule the closing.
Okay. Now the step 11 is the title search. Now title, as you know, it's very important because the title basically that's the ownership. Okay. So, title insurance really, you will pay a title company to search the chain, the ownerships of that particular property. You want to make sure that, this person who's selling you that place, that he has the right to sell that place, and that maybe there's nobody else who might be involved or otherwise come after the sale after you sort of and say, hey, listen, by the way, I was a part owner as well, and you should pay me. You should give me a piece of the action. And at the same time, the title also going to make sure that the home is free and clear of any liens. So of course, one of the liens is going to be the mortgage lien. Different liens might be a mechanical lien. There might be some violations on the house as well. So of course, the house needs to be free and clear of all violations. And there can be no stipulations when it comes to the title. It has to be a clean title. So when you buy that home, you're not buying, cans of worms in it. You really got to know what you're getting into. Okay. There's one thing that the physical structure, okay, the home itself, and second part is the home on the paper, sort of, right? The ownership of the home. And many times there might be violations for thousands and thousands and thousands of dollars. I mean, I've seen homes they had 300, 400, 500,000 in violations.
Wow.
And if you buy that, and then it's yours, because those violations goes with the house. They don't go with a person. So it's really important that number one, you got a good agent, you got a good loan officer, you got a good attorney, because this is a job for the attorney to really make sure that, hey, what's going on with the title? Are there any violations? Are there any bills past due? What's going on with the water bill? What's going on with the taxes? Okay, what's going on with the COO? You wouldn't believe how many times I've seen when people come to me and they say, John, I want to sell my place. I say, great. What you got? He said, I got 2 families. I said, all right, let me get the ball rolling. And they said, hey, it's actually 1 family. I said, no, it's not. It's 2. No, I'm telling you, it's 1. No, I bought it as 2. Can you show me the papers you got? It was 1 family. he was trying to save up money on the attorney. It costs him a lot more long term. Okay, so title search, good attorney, really making sure you get your ducks in place. It's extremely important, guys. It can be a very expensive lesson, which you don't have to pay for. And step 12, clear to close and schedule the closing. That's when everybody's happy. Mostly everybody's happy, right? Usually the seller's happy. The buyer might be a little nervous. In New York, the closing, it's usually done in person, comparing to the other states where it's done, predominantly in the title company, one by one or remotely.
Although that's changing these days.
It is.
In
It
New
is.
York?
It is for sure. I was about to say it's a little old school, and we're getting a new school thanks to Corona. So a lot of things are changing, guys. But basically, who's going to be at the closing? It's going to be the buyer, his attorney, the seller, his attorney, the bank attorney, and the title. And of course, the agents. The agents, they're going to be there as well to assist if anything needed. And sometimes, the loan officers shows up as well. It's rare, but they do. So let's talk about the new age, the virtual world. So as of now, it's May 2nd, 2020. We cannot show in person, okay? So, but we can show virtually. Number one, free initial virtual home buyer consultation, okay? We big on this at Type Group. We do everything virtual, so we really go in depth with you on the market and what's going on, monthly payments, what options you have to really figure it out. We don't have to meet you in person now. Everything is done via Zoom, just like that. And we can really share you a lot of the information which you need to determine if it's the right time for you to buy right now. Number two, you can shop for homes via our website or mobile app, which is something great. I think, and Josh is over here, from our team. He can probably attest to that. It's making life easier for everybody. I think it's very convenient for the buyers, and it's very convenient for the agents as well. It's really a time saver because we really take you sort of behind the scenes, and you can be part of it, and you can know how we put up the show, and you can really get familiar with it, so you understand what goes into it, and really pick the best homes by yourself, sort of, right? Number three, view homes virtually or video live stream. Now, initially, what we would do in our process, we would initially do on our listings the video tour at first. If that video tour, checks off, then we would go into a live stream. So we would actually, send somebody out, either us or maybe the homeowner if it's present, where he would walk us through the house on Zoom. So we will be on the Zoom, you'll be on the Zoom, the seller will be behind the camera, and sort of we will be directing him and discussing, the home as we speak right now. So you can really see it almost as in person as well, okay? And number four, when you're ready to submit an offer electronically, everything's done electronically, okay? Many times what we do submit an offer, subject to view the home in person. And we do find that helpful because a lot of homeowners, they still don't want to show the home in person. I understand that. It's done virtually, but a lot of home buyers, they still want to see the home physically. Just to make sure that, this is the house. It is not the neighbor's house. This is the house which I'm buying, which I saw with Josh on Zoom. And, when you have that offer in place and you show seriousness to the seller, of course, the offer is subject to, so there is no commitment unless you see it. That's the best part in it. It sort of will help you out to get your feet in. And just to make sure that you can really, go to the next step, which will be the home inspection, okay? Now, secure electronic earnest money transfer, right? Nothing's done in person. Leverage a professional home inspection report, okay? Again, virtually, okay? The buyer, it's not the traditional way when the buyer wants to be present, right? With the home inspector, breathing on his neck and really, looking at every single screw, making sure that what he's doing. This is done virtually, so you still, behind his neck, but breathing on it because you're breathing on your screen. but you can still see whatever you need to see to really determine what's going on with that place. And of course, you get that report from your home inspector as well. Number 7, which I do find it kind of ridiculous. In New York, we didn't have a mobile notary till last month. Compared to rest of the world and rest of the states, I mean, they've been using it for over a decade, so that's a little embarrassing. But we got it now. So mobile notary is necessary to coordinate the signing with the escrow, and also the closings they've been done virtually now. So that's pretty incredible, and I think that's something really exciting, which we're gonna carry over even after the Corona crisis are over. And congratulations, officially you are the homeowner. So reasons to use a good agent, right? Now I said a good agent, because not all agents are good. And you know what happened in 2004 when the market was doing really good? People say, you know what, this is easy money, let me jump in. And people got into the business for not the right reasons. Or you get people, in the business, which they do this part-time, right? So they have a job and they just do this on the side. Like, when my neighbor wanted to sell a place, so I was like, let me get a license so I can get paid on it. And he did one and said, it was easy. I guess if I can find more neighbors to sell their place, I'll do it. But they don't really take it seriously as a profession or as a business, right? So of course, it is important to find somebody who does this full time and who has some type of track record, right? And who can show you exactly what they're going to do, step by steps and systems to use and stuff like that. I think it is essential. Good agent should make the entire process easy for you. Okay, you should really take the pressure off your back and really sort of absorb the pressure and make sure that it's joyful thing for you. Give you some valuable insights into the market. I think this is huge. It's not just about showing a home, but knowing the data, really knowing what's going on in the market. That is crucial. Help you find the right home that meets your needs. Of course, we as agents, we look at homes every single day. So we kind of can really help you to figure it out sometimes too, what it would be the right setup for you and the family. Okay, maybe location, maybe condo, maybe house. There's different options for people to buy. A good offer, right? Of course, you want an agent to determine a good offer. You never want to overpay, and you also don't want to underpay, so you're not going to be able to get that home. So he helped you out to get it through the counts and negotiate with the seller, of course, and stay on track all the way to the closing, because as you know, this takes 30, 60 days, and it's never over until everything is signed and done. As probably Peter can attest to that, there's many instances when the deals, they fall off right at the closing. Right at the closing. I mean, I've seen it, I experienced it when the deal falls off right at the closing. So to have a good agent to sort of predict those bumps, those scenarios which they might come up, and address them or reflect them before they become an issue, it is a crucial, guys. And I think, many buyers and sellers, including, they don't take this seriously. They think to sell a home, it's just find a buyer, sign a paper, and close. It will be good. It will be just like that. But in the reality, there's a lot more things which comes into play, and many things which you would have experienced, thanks God. But I can attest to that, doing it for 16 plus years. There's many different scenarios, and even including till today, on every transaction, I learned something new. There's always something new what can come up. Okay, so you need to have a good real estate agent. So I would strongly suggest, take your time to find one, read the reviews, compare, talk to him, see what he's offering, see how he's working, and if it's a good match, then go ahead with it. Now, some of the house hunting tips. Be market savvy. Like I said, start the search early. Be realistic. Of course, I always say, when, especially first-time buyers, right, when they're starting to buy, their expectations are here, and they want to mention and they want to pay $1 for it, right? This is the budget. And as you go through the process, the expectation they're gonna go down and the price gonna go up. Once they meet, that's when you're standing on the ground, and that's when you're gonna buy. Okay, so be realistic about it, what you can afford into the market, and don't overstretch yourself. I think that's very important. Be flexible when it comes to your needs versus wants. Hey, we all want things, but we all need some things first. So needs over wants. Okay, and that's it, guys. Thank you for coming. It was a pleasure.